Clarity is critical. We know this from everyday life. When you set a meeting with people in different states, you make sure you specify time zone or you risk being the only one on the video conference. Of course, clarity isn't only important in everyday situations. It's also important when it comes to the terms of service we all agree to when we open an account on social media, with an online payment processor, or a bank. More often than not, the powerful corporations we all depend on every day rely on vague and subjective terms that can easily be weaponized against us. The clearest example takes place on social media platforms, where users are censored under these broad policies for challenging dominant ideological narratives. Remember when pre-Elon Twitter shut down important voices like the Babylon Bee and Jordan Peterson? Twitter set the table for the censorship through its now defunct misgendering policy, which employees often wielded to pick free speech winners and losers on one of the most consequential debates of our time. The same thing is happening at powerful financial institutions, including at commercial banks, insurance companies, and service providers that commonly justify their decisions under the rubric of reputational risk. For instance, in 2020, Bank of America sent a terse cancellation letter to the Timothy II Project International, a US-based nonprofit that trains Christian ministers who serve impoverished areas in Asia, Africa, and South America. Without specifying why or offering any form of appeal, the bank simply informed Timothy II that it was closing the ministry's 10-year-old account because it was operating a business type we have chosen not to service. The same scenario has played out with other Christian ministries, including Indigenous Advance, which serves at-risk populations in Uganda, after Bank of America sent them a nearly identical letter. Recently, federal and state governments have taken advantage of these reputational risk policies. Starting in 2018, the state of New York launched an all-out assault on the National Rifle Association, which advocates for the constitutional rights protected by the Second Amendment. Of course, the First Amendment prevents the state of New York from directly targeting the NRA for its speech and advocacy. So, then New York Governor Andrew Cuomo and head of New York's Department of Financial Services, Maria Vullo, tried to bypass the First Amendment by using their power to pressure financial institutions into cutting ties with the NRA. Leveraging the financial industry's reputational risk policies, Vullo used back-channel meetings, public investigations, and threats of fines to intimidate insurance companies into dropping the NRA as a client. You don't have to agree with NRA's politics to see why this is a problem. The ACLU certainly doesn't. It represents the NRA at the Supreme Court. The government can't weaponize private corporations against groups simply because their advocacy goals don't align with the governor's. That's at the heart of the Constitution and Bill of Rights. And it's also why the U.S. Supreme Court has decided to hear the NRA's appeal. But it's not only the state of New York that's to blame. Financial institutions, insurance companies, and other crucial service providers owe it to American consumers to be clear, transparent, and specific in their terms of service, including those that relate to reputational risk. The problem is widespread. Alliance Defending Freedom's 2023 Viewpoint Diversity Score Business Index found reputational risk or hate speech policies at 21 of the 44 largest financial institutions in the U.S. These vaguely worded policies are a threat to everyone, practically begging to unleash untold harm on Americans of every political and religious stripe. These publicly traded corporations hold tremendous influence over our everyday lives. Is clarity too much to ask for in return? Find more videos like this at adflegal.org/freedom matters. Before you go, click like on this video and subscribe to this channel so you never miss an episode.